Hi, everyone. This is Tim Melvin of the Tim Melvin Banking on Profit newsletter service down here in Central Florida. And I wanted to send out just a quick little video today to talk to you guys about being a member of Banking on Profits. I know some of you probably have read my columns on realmoney.com and other websites, or perhaps you get our free Thursday newsletter and weekend video that we send out. And maybe you've even thought about being a Banking on Profits member, or it hasn't crossed your mind that much. So I just want to tell you exactly what happens when you become a member of Banking on Profits. Well, let me back up just a little bit and tell you why I got involved with community bank stocks. I started doing this back in the very early 1990s when I decided I really didn't like the big firms. I'd been with Shearson and I had been with Dean Witter, and I really loved being a stockbroker back then. It was still about selling stocks and bonds at the time. But I didn't like the big firm feel, so I moved to a small firm in Annapolis, Maryland. It was one of the best decisions I ever made in my entire life. Um, and that firm, its reputation was based on the fact that it was involved in just about every tax-free bond deal in the Mid-Atlantic region, which I thought was cool. I do like a good municipal bond if I can get it over a 5% interest rate. It's going to be a while before we can do that again, I think. And they also made a market in just about all of the really small community and regional banks throughout the Mid-Atlantic and parts of the Southeast region of the United States. Didn't really interest me. Didn't I liked the big liquid stocks at the time, and the idea of just buying these little bank stocks didn't seem very exciting to me. Then I noticed over time there was a gentleman in the office, very nice guy, very well known about town, very successful. I mean, whatever your definition of success is, this guy had it. He had the nice house in town. He had the big house on the island in the Chesapeake Bay. And he was a fantastic guy who eventually became a very, very good friend. And he lived just a really nice life. And he was the last truly dedicated practitioner of the three martini lunch. He was never late to happy hour in the 20 some years that I worked with him. Just an all around great guy. All he did was invest in these small community banks for his clients. And a couple of them, he pretty much knew where every share was and kind of controlled trading in these things. Just made for a great life for himself. And as I looked into this, and keep in mind the time frame, this is just about the time the S&L crisis is cresting the peak and starting to come back to normal, I guess is the way we'll put it. And I'm looking at these little banks, and they're trading at 30 and 40, 50% of tangible book value. 75% would have been a very high multiple to pay for these as the crisis was in depth. But there were just tons of them around at 80% of book value, which is the threshold that Marty Whitman used to talk about when he was buying a lot of banks at Third Avenue Value Fund. Just tons of them around to buy. What happened is I got involved with it because it was perfect. I could make more money without working any harder, and my clients did extraordinarily well with these things. Over the next, let's say 7, 8 years, by the time it all peaked out in 1999. Now remember, we'd bought all these stocks, top 80% of tangible book value, and at the time, takeover ratios, other banks were paying 1 to 1.2 times book value, so sometimes you got a quick, 30, 40, 50% pop in the price, and nobody really minds that either if in a reasonable period of time. But by the time all this topped out, bank takeovers were occurring at 2.5 to as much as 3 times book value. Now remember, we'd paid 30 and 40% of tangible book for some of these, never over 80, so we had just made huge returns in a reasonable period of time. And as they topped out in 1999, of course, it got a little more difficult to make money in the things we, were holding them. Not many names around to buy. But then, of course, comes the internet bubble, and we're right back to 50 to 80% of tangible book value. The whole thing plays out all over again going into 2007. 2007 was the only year that I can say that in the second half of the year we didn't own a single bank because there simply were none cheap enough. Now, that was frustrating then, but in hindsight, relying on that 80%, 85% of tangible book value ceiling as the price that we're willing to pay, we missed out on the whole debacle, and then we're able to step back in starting, I'm going to say mid 2009, started getting interested in buying again and right back in there at 50, 60% of tangible book value. And we're moving along. Takeover premiums today are at about 1.2 times tangible book. So it's been a profitable few years for us, but this is the early innings of this thing. This is going to go on for a lot more years. I'll call it the trade of the decade. I think maybe the second or third inning of that. We can still find a ton of books of banks around 85% of tangible book value. We can find a big number that trade below that level and still meet all of our safety criteria. So I wanted to start this newsletter to allow folks to get into this and enjoy the benefits and wild profits that I think we're going to get from participating in the trade of the decade. So let me tell you exactly what we offer with Banking on Profits. First off, when you become a member, you get my weekly commentary. I'll just talk about what's going on in the economy, what's going on in the banking industry. We draw heavily on the Federal Reserve, FDIC reports that are released during a particular week. You'll get that every week, along with our entire portfolio is on the page. And this week, we've got some holdings now that are trading up closer to book value. They're sort of holds. We're not buying. We've still got them, but I just not adding to the position. But when I sent the list out this past Friday, I had 30 banks. Smaller banks that were liquid enough that everybody could buy shares in them. I'll deal with the smaller, more illiquid ones. Now, mind you, these aren't Microsoft, okay? You're not going to day trade them, and sometimes you have to work to buy them. But we had 30 bank stocks that traded for less than 85% of tangible book value and met our safety criteria, had very low levels of non-performing assets as a percentage of total assets, and had plenty of equity capital and equity to asset ratios in excess of 10%. And this is a pretty geographically diversified portfolio of stocks on the buy list. We've got a few from California. We got some in Wisconsin, some in Ohio, New York, Pennsylvania, a bunch of banks from my old stomping ground in Maryland. North Carolina is well represented on the list, as is Florida. We've got some Alabama banks in there. We're pretty spread around the country with our diversified portfolio of small community bank stocks that make up the trade of the decade. Now, this gets good. 22 of the 30 stocks on our list have an activist investor involved in the stock. And these are activists who are known to have enormous success investing in small community banks. In fact, there's a report from the brokerage firm Sterne Agee, who also specializes in banks and smaller banks. They put it out late last year, and they found that in the last decade, small bank stocks that had a activist investor with a significant stake returned in excess of 28% annually, that the index did about 17% over that period of time. This is the bank stock indexes, okay? And the ones with the activists actually had a total return of over 47%. Huge excess performance when there's an activist involved in a small bank stock. More than 1 in 3 of them was eventually taken over during the period of time that the activists held the stock. There is a huge edge to investing in small bank stocks that have an activist investor involved. I've got a list of 22 of them right now that are trading at very attractive prices, and the activists have been buying the stock in the last few months. So you give yourself kind of a huge double kick there. Valuation, safety, activist involvement. Our buy list is full of stocks that offer you exactly that opportunity right now. So that comes out every Friday. Once or twice a year, I'll take a publishing holiday if the kids are in town from up north. But pretty much every Friday, you can expect that weekly commentary and buy list to hit your email box at some point during the day. Then let me just say, okay. Last year in our portfolio, sorry about that, lost my place. Last year in our portfolio, we had the same type of performance that Sterne Agee did. We were involved between this and our 10 Tiny Banks portfolio. We had involvement in 7 takeover deals with an average gain of over 40% for subscribers. Now, that's not bad, but I think it actually gets better from this point going forward because there's going to be more pressure on these banks to merge. Now, something new that we just added to the portfolio management side of this, and this is actually, as it's developing, it's pretty exciting. There's a lot of stocks out there that is community bank stocks that are they're too cheap. They're too small. They're $5, $6, $7 million in market cap to put in the regular portfolio. There's all kinds of conflicts of interest could rise from these stocks because they tend to be very illiquid. I personally own a few of them, so it'd just be wrong for me to say, hey guys, I own this, here, bid my stock up. Or you get, hundreds of people trying to come into a $2 million market cap bank. not everybody's getting filled, and the price could very well leap a lot higher in a very short period of time. So instead, what I've done is I've put together a list of 113 banks that have less than 500 million of assets. Depending which analysts you talk to and which region you're in, by the way, the common consensus is you need to have at least between $1 and $3 billion worth of assets as a community bank in order to be able to afford to remain independent in the current regulatory environment. The cost of regulation is going up. It's going to continue to go up. Remember, only half of Dodd-Frank has actually been implemented so far. There's a lot more to come, a lot more paperwork, a lot more regulation, a lot more lawyers you're going to have to hire. So 1 to 3 billion, depending again exactly who you're talking to, what region of the country, is pretty much the floor to be an independent bank going forward. So we cut the bottom number in half, said 500 million. We're going to look at all those little banks. So we sent out this list of 113 stocks that have less than 500 million in assets and trade below book value. And then each week we've sent the spreadsheet out. That's, you can do it yourself, dig through them. It's not an easy process, believe me, but I do kind of walk you through how to do it if you're interested in doing that. And each week I'm picking 5 or 6 banks and just talking about them, going and looking at their service area, the safety factor, the non-performing assets, non-performing loans, what the loan portfolio likes, how much commercial versus residential lending are they doing, are they buying back stock, are they paying dividends. We're not going to call them official, in the portfolio regulations, but we're trying to separate the good ones from the ones where maybe you want to see some improvement in the balance sheet or that type of thing before you rush in there. It's a process. A lot of these banks don't file with the SEC, so you got to call them or go to their webpage and dig through the FDIC call reports. But I'm a geek, so for me that stuff is fun. And then I've been writing about them. We did a video on a few of them this past weekend, and just getting the information out about these really small little banks that, if you're able to get in there and buy some, offer a tremendous opportunity. So that's become a new and I think really exciting part of the service. The feedback I've gotten from subscribers so far has been fabulous. We've had some great conversations about it. And I think it's a lot of fun to talk about this stuff. And I think these banks will make you a tremendous amount of money going forward. Now, it was interesting that when we pulled the list up, the average assets was 311 million. They're trading on average at about 67% of tangible book value. Non-performing assets as a percent of total assets is below 2%, and the average equity to asset is right at 10%. A lot of opportunity to find safe and cheap banks that can make you a lot of money over the next 5 to 10 years. So that's a really cool part of the service. That's an addition to the managed portfolio part of our service. Now, one part of Banking on Profits that I think really gets just tremendously overlooked is the resource page. Now, the resource page is where I've put together a collection of what I think are evergreen starter articles, academic studies, practitioner studies, FDIC reports, Federal Reserve reports, just anything that I could think of that has helped me learn about evaluating researching and trading community bank stocks. There's a couple ebooks in that section, including one of mine on how to trade these small illiquid banks. And we also have some material on how to deal with illiquidity because it's a different mind process. To me, the less liquidity some of these banks have, the better it is, because I'm not going to get whipped around by day traders and high frequency trading. And, we're able to really function on the fundamentals of the bank. They tend to have very low volatility as a result of the illiquidity factor. But that's a whole new mindset that you have to learn. We have all of this in the resource section. As I said, it's evergreen. We plan on adding to it as time goes by when we find more stuff that we think will make you a better investor. We don't talk about that section enough. I don't think it gets used enough, but it's there and it's free with your membership in Banking on Profits. Then the other thing that I provide is every Saturday I send out a reading list. The reading list is a really important part of your subscription. I'm a geek. I read everything that I can get my hands on. As a bank stock investor, I'm reading all these local business journals from around the country and some of the bank industry specialist journals. And anything that I find in there that I think is interesting and will make you a better investor, I'm going to send you a link to that on Saturday so that you can read and catch up on what's going on in the economy, banking industry, what's going on with bank mergers, what's being talked about at the bank conferences around the country. I confess that sometimes I slip in some books or baseball or wine information that I found interesting and fascinating. But generally speaking, you'll get a list of a whole bunch of articles that are going to keep you better informed and make you a better investor. I think this is a great part of the service. So now, I'm also going to mention we have a monthly publication that we send out called Banking on Profits Monthly, and we charge like $99 for that, I think. That's more of just a grand overview of what's going on in the banking sector in the past month, along with some stock screens, maybe a bank CEO interview, articles that I've written about the banking industry in the past month, and a bunch of screens that you can use to be a do-it-yourself type of investor. That's included in the Banking on Profits membership. You get everything that we do in Banking on Profits. When you're a member of the main service, you get that added to your subscription at no additional cost, and that's my promise to you as long as you're a subscriber. If we do a bonus ebook, anything else that we do with the Banking on Profits framework is going to be included for you at no extra charge. I think that's only fair when you're subscribing to the service. And when we did the 10 Tiny Banks ebook last year, which just performed extraordinarily well, existing subscribers did not pay the $100 for it. They got it for free. That's how it will always be with this product. Now, normally we charge $3.99 a year, which I think is actually a great price. You're getting, top performing bank selections, intensive research. I've been doing this well over 2 decades now. I know what does and does not work in community bank stocks. We have this exciting new list and weekly discussion about just these ridiculously small little banks that when you're able to buy them, just are going to offer you tremendous return potential over the next 5 to 10 years. You also have access, and I think this is also an important part of the service. You can email me with questions about just about anything. Okay, we'll talk about the liquidity factors. We'll talk about which banks we do like and don't like, what the activists are up to. You can bring ideas to me and, hey, Tim, I found this little bank that you haven't talked about. What do you think about it? And I'm willing to talk about it with you. You want to talk about the general market, the economy, the likelihood of the Baltimore Orioles going to the World Series next year, whatever it is that you want to chat about. If you email me, sometimes it's a one-line reply, and that means I'm busy, but I don't want to leave you hanging waiting for the reply. I'll get you the information in as short and condensed form as possible. But I got a couple of these discussions that have been going on with members where, we've become close friends. We communicate all the time and talk about this stuff on a more in-depth basis. And I hope more of you do that. Just be patient with my one-liners. Sometimes it may take me a bit to get back to you with a more extended response. But you do have access to me, and I usually return emails 24 hours at the latest, usually within a few minutes, because I'm right at the desk a good part of the day. And let's see. Oh, trade alerts. Yeah, I forgot about that. We don't make you wait to find out when we're buying and selling stuff. When I put a stock on the buy list, you get, I don't know, I guess you could send it to your phone, to your email account, wherever it is that you need the alert sent. We'll get it to you right away. Position sizing information is included. We do use smaller position sizes most of the time. We want to own a lot of these things and let this work for us. And then, of course, if we sell, we're going to get you that alert out right away. If there's any price parameters on that, they'll be included in the email or text message alert that you get. So you're right on top of what we're doing. Within milliseconds when I've decided, okay, this one's at the right price. Let's buy it. It's a pretty complete package of services that you get as a Banking on Profits member. As I said, we usually charge $3.99. Now, we're just in the early stages of the year. Deal activity is picking up. It's expected to pick up dramatically. We're going to see a lot of bank takeovers in 2015. It's going to be an enormous amount of money made. So I want to get you involved as early in 2015 as I possibly can. So for the next few days, we're going to sell Banking on Profits with the weekly commentary, the buy list, the teeny tiny bank, mini cap bank opportunity list and discussion, because we'll be ongoing talking about several of these a week and getting you the information you need to make the right picks in these really small community banks. You get the resource page, you get the weekly reading list, you've got access to me. We're going to do that for $2.99 for the next few days to get you a chance to get into this as quickly as possible. Now, to take advantage of this, you can either call MarketFi at 877-440-9464, or I will have a link in the description section of the YouTube page for this video, and you can just click the link, go right to the site, and sign up for a full year of Banking on Profits with everything that I've talked about here today for just $2.99. This really is the trade of the decade. It's a tremendous opportunity to make an enormous amount of money in the most boring way possible, buying safe banks at tremendous discounts for book value and holding on for an extended period of time. It's the best approach to long-term investing I've ever seen in my more than 25 years around the financial markets. So make that call, click that link, and join us at Banking on Profits today. I really do. I look forward to having you as a member, and thanks for taking the time to listen.